Hi folks, it's great to see you on another video. You might have seen my earlier video on the introduction to financial independence. This video is in continuation of that. In my previous video, I talked about the ways and means to achieve financial independence. One of the things that delays the achievement of your goals are your spendings. Credit cards are a major contributor for all your spending mistakes. In this video, we'll take a closer look at the ways credit card companies lure you into the trap and makes you spend more than you have. Let's get on to the video, shall we? Before we get into the details, let's see a little bit of data points on credit cards in our country. As per the data available with the Reserve Bank of India as on December 2020, almost 6% of the total Indian population have credit cards. The total spend on those credit cards every month is a whopping number of 63,600 crores. Pretty huge amount, is it? Now that you have seen the data points, let's look at some of the ways credit card companies lure the customers to subscribe to them. First and foremost thing that the credit card companies do is that they relate their products to your dreams of buying certain products or gadgets and how it will help you to fulfill those. Customer, without realizing that it's a bait, imagines himself buying those dream products or gadgets and then bites the bait. Next is the interest rate. Even though the credit card comes with the highest interest rates in the country, which is close to 26.2% per year, the credit card companies, they tell us only the monthly interest rate, which is 2.5% to 4% depending upon the card that you use, which are pretty low numbers. But if you convert those numbers into annual interest rate, then it will be a whopping 26.2%. Not many of them will convert this and realize this. Rather, they just see the monthly rate of interest and they end up falling into the trap. The next bait are the gifts and discounts. The credit card companies tell us that spendings will earn points and you can convert them into shopping vouchers and gifts that you like. Technically speaking, to earn 500 points, you must spend almost 50,000 rupees. And for that 500 points, the converted rupee value is only around 100 rupees, which means if you want to convert that 500 points into a shopping voucher, you will get only 100 rupees worth of shopping vouchers. In a nutshell, you earn 100 rupees for every 50,000 rupee that you spend, for which you will end up paying 1,250 rupees as interest if you are revolving your credit. The credit card companies ties up with a lot of shopping websites to offer you discounts when you use their credit card for purchases. Many people, when they buy things that they don't need, they end up not getting the discount, rather they end up spending their savings. Last but not the least, giving some fancy rich names to the credit cards like Privilege, Platinum, Gold, Club, Selected, etc. to lure the customers into the trap and subscribing them. Let's try to read between the lines of banks' promises and advertisements and see how we are being kept in the dark. The first and foremost thing that the banks say is about the interest-free credit period. They say that you can enjoy 50 days of interest-free credit period for all purchases. But if you read between the lines and see, you can understand that the 50 days of interest-free credit period is not applicable for all purchases. It's applicable only if and only if you purchase on the date next to the statement date. For example, if you buy any product by swiping the credit card on the date next to the statement date, you will enjoy 50 days of credit period. If you purchase 2 days after the statement date, you will get only 49 days of credit period. If you purchase 3 days after the statement date, you will get only 48 days of interest-free credit period. and so on and so forth. As the days near the statement date, the number of interest-free credit period also gets reduced considerably. But one more caveat is that the interest-free credit period is not applicable if you do not pay your outstanding in full on the previous statement. If you revolve your credit or don't pay the outstandings at all, then the interest rate is applicable right from the day of purchase. The next thing is the 2.5% interest on your purchases. The banks tell us only the monthly interest rate, and if you convert to them for 12 months, you will end up paying almost 42% per annum on a compounded basis. The next thing that they normally say is that we have to pay only 5% on the outstanding principal to enjoy the card. But in reality, when we think that we are paying 5% of the outstanding principal, it's actually not. We will pay only 2.5%, whereas the remaining 2.5% is the interest charged on a monthly basis on our outstandings. So this is what it gets converted into annual rate of 26.2% when you revolve the credit and pay only the minimum balance. And as you already know, collecting points is a scam, and buying your dream gadgets, blah blah blah, it's also a scam. And the card that comes with additional features like free lounge access, free golf course access, free air insurance, etc., etc. Getting them is not that easy. It comes with a lot of caveats and restrictions. Almost many of the things that the credit card companies offer, we don't end up using them, but we end up paying for them. As per the regulator, all credit card companies are mandated to give these details to the customer, including the ways in which interest is being calculated on your balances. The credit card companies follow them and gives them in a separate document called as most important terms and conditions. I'm not sure how many people would have read that. It comes along with your paper statement, and it doesn't normally come along with your email statement. But the end customer did not read them, and we go by the words that are given by the credit card companies. When a customer read those terms and most important terms and conditions, many of them will refrain from taking the credit card from the banks. I'm pretty much sure about it. By this time, you might have gotten a feeling that credit cards are very dangerous and are to be literally avoided. No, it's not. Just like any other product, credit cards also have two sides of the coin, both advantages as well as disadvantages. It's like playing with fire. If you know how to control and play with it, you can cook with it. But if you don't know to control the fire, you'll get cooked. As simple as that. So with that in mind, let's look at some of the major advantages of using the credit cards. First and foremost advantage is that there is no need to carry cash with you. You can use the card and then pay it. But mind it, you will spend only, I repeat, only if you are going to pay the entire statement amount in full, month on month. If you cannot do it, forget using the card. And secondly, there are a lot of shopping websites that allows you to buy products with a 0% EMI, which means that you can buy the stuff that you need easily with EMI without paying any interest whatsoever. But before you proceed buying that, please read the terms and conditions fully before swiping your card. And the third thing, all your credit cards are insured against fraudulent usage if you report them immediately or within the timeline mandated by the card issuer. Even you also, you're insured for any accidental death, for a substantial coverage with absolutely zero premium. That's one more advantage, is that you get a risk cover without you paying any premium. But this is applicable only if you don't revolve your credit. If you revolve your credit, your premium is included along with the interest that you are paying. And last but not the least, credit cards can be of very good use in emergencies like hospitalization, at times when you don't have any cash with you to take care in those emergencies. Having said that, let's look at some of the major disadvantages of credit cards. Starting from the temptation to buy stuff when you don't have cash and going up to the highest interest rates on the lending businesses. The disadvantages outweigh the advantages when it comes to credit cards. With respect to the interest rate, let me give you a small example. Assuming that you are spending rupees 10,000 the moment you get your credit card and pay only the minimum balance month on month, it will take 92 months, and that's 7.5 years in perspective, for you to repay that 10,000 rupees in full. And in that process, the bank would have collected almost 20,000 rupees from you as interest, which is equal to 200% returns for the bank at an annual interest rate of 26.2%. As I used to say, credit cards are good if and only if you pay the outstanding amount fully every month without any excuses. Although many card companies gives you cards for free, some cards charge annual fees for their so-called platinum, gold, privilege or club class, etc., etc. The fees itself ranges from 2,500 rupees to 10,000 rupees per month. If you notice a pattern in these, people who have less salary, they get cards for free. Why? They have a limited potential to repay the outstandings and will rotate the credit for sure, or probably 95% of them will rotate the credit for sure, and thus it will result in the issuer or the card companies earning a lot from the customer. Whereas for people who earn more, they have a tendency to repay their statement outstandings in full. So with them, many of them won't be revolving the credit, and thus the banks cannot earn any kind of interest from them. So for those people, the bank will definitely charge annual fees. So in any case, be it a customer who has less salary or who has more salary, at the end the bank is the profitable one. Last but not the least, a non-payment or delayed payment of your credit card and outstandings will result in your credit score getting affected to a larger extent. Now the question comes as to how I can be safe in using a credit card. Use your credit cards only for emergencies and 0% EMI offers to buy the things that you need. I repeat, need, not want. And buy it only if you can pay it correctly, or you will end up paying huge amount of charges. Always pay the full amount due once a statement gets generated on time, every time, without fail. Well, this is how you use a credit cards to your advantage. And this is for people who wanted to use credit cards but still be safer. Before we close, a couple of things to be kept in mind if you don't want to fall into the credit card trap. First thing, don't buy things that you don't need just because they are offered on discount. Let me make it clear. When a product that you don't need is available on 20% discount, you will think that you have bought it with a 20% discount. No, that's not the case. In reality, you have spent 80% of your savings on a thing that you don't need. As mentioned before, do not revolve your credit. Always, I repeat, always pay your outstandings in full. Do not get lured by catchy marketing and products, select an appropriate card that suits your requirement and get it as cheap as possible. By cheap, I mean without fees. Do not, I repeat, do not get loan against your credit cards or withdraw cash with your credit cards, as it has the highest interest rate available in the market. If the cash is a dire necessity, you rather opt for a personal loan or any loan against collaterals like a gold loan. And now let's see how to lead a life without credit cards and what are our options. The first and foremost thing, always buy stuff with cash or debit cards. In short, buy things that you need with the money that you have. Delay your purchases, delayed gratification, and urge to purchase something. Don't be a shopaholic. Plan, budget, invest, and then spend your returns so that your cash remains intact with you. Do this for all your wants and see your life prospering day by day. The good thing about these is that if you do these things as an alternative to credit cards, what you get is peace of mind throughout your life. Your salary is yours and does not belong to the bank, and lots of money to invest and earn more and more and be financially independent. So that's it for now. Thanks for watching, and I'm looking forward to meet you on my next video on loans and its implications on you. See you.